Rivian, the electric vehicle manufacturer and seller, reported quarterly financial results after the stock markets closed on Thursday, November 7. That relieved some of investors' biggest concerns with the electric vehicle company. They reiterated that they will turn a modest gross profit in the fourth quarter. There was a lot of fears that they were not going to do that they were going to remove that guidance because of the challenges they faced recently with the production issues and the fact that sales are declining year over year. So with that being said, let's take a look at the company's other numbers, what it can mean for Rivian stock investors, and I'll also update my recommendation for this stock. I've told investors to avoid this stock. I've had it rated as a hold for a long time now, and electric vehicles, as you know, are not an industry favorite of mine. But let's take a look and I'll update that recommendation here.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Rivian saying that during the third quarter, they made progress advancing the R2 platform, which is going to be a lower cost platform. They've kind of hinted at a price point of around $45,000. That would be less than half the average selling price of their vehicles right now, which would drive greater adoption, which would drive more people towards Rivian as an option. Right now, their vehicles are so expensive, closer to $100,000 for some models. And so that's driving away a lot of the broader people that could approach this brand. So they are seeing continued progress on their vehicles, on their second generation R1 vehicles, which we expect to be represented in the fourth quarter when they anticipate achieving modest positive gross profit. Now, much of this is due to lower commodity prices. That's one thing that has benefited the EV industry this year, is because demand has been so much lower than expected. The commodity prices, the inputs that go into these vehicles, the prices have come down because these car manufacturers are not buying as much of the materials. They're not making as many of these electric vehicles. And so the prices of these commodities are coming down. That's one of the benefits when you're in an industry that's not growing anymore, or that's not growing as much as people thought it would. And so there's going to be a recalibration in prices. That was the opposite of what was happening in 2020 and 2021, when there were so many electric vehicle companies entering the market and they were capitalized so heavily. Investors were giving every electric vehicle company seemingly hundreds of millions and billions of dollars just because they showed you a picture of an electric vehicle. And so when they're starting up, they're of course buying these materials to try and make these electric vehicles, and all of that competition drove up prices for commodities. I had been talking about that, right? It's not just competition for sales. You're also competing for materials, for talent, for capital. And that's the downside of the car industry. It's so competitive. And then on top of that, you have that worsening by these government programs that are essentially forcing car manufacturers to make more electric vehicles, way more than what consumers want. And that's creating this disequilibrium in the market. It hasn't been good for investors. It hasn't been good for car companies. I don't know who it's been good for. And it's one of the more disappointing policies I've seen out of government. So in the latest quarter, Rivian reiterated that they expect to achieve a modest positive gross profit. And that's great news that they reiterated that. Investors have been hoping the company does hit this milestone. It's just the beginning. This is the easiest profit margin to make. You have gross profit margin, which is the easiest. Then you have operating profit margin, which is much harder. And then you have net profit margin, which is the hardest. So Rivian is just now expecting to hit a modest positive gross profit in the fourth quarter. And they need it. Boy, do they need it. They're losing so much money on the bottom line. They've burned through tens of billions of dollars trying to stand this company up, and it's been difficult going, to be sure. Rivian produced 13,000 vehicles and delivered 10,000 vehicles. they did experience a production disruption, and one of the bad news that came out of this shareholder letter is that it does not look like it's resolved yet. The team, they say, has a strong sense of urgency in finding a solution. So they're still looking for a solution for these production disruptions, and that's not nice to hear for shareholders. Still, over the long term, they believe that the value of the company is so much dependent on the lower priced platform, the R2, the R3, and the R3X. The R2, which they're planning to launch, they say, in the first half of 2026, and it's expected to be priced at around $45,000. By that time, however, there will be several other models that are priced much lower than that, including one of their partners, right? Which I thought was really interesting, right? They just made this big deal with the VW group, right? Where they're going to receive approximately $5 billion from VW. And just a few weeks ago, VW announced that they're going to be coming out with a brand called Scout Motors that's going to compete directly with Rivian. It's going to be an electric SUV and an electric pickup truck, precisely the two products that Rivian is selling, and VW will be incorporating, or it looks like they will be incorporating Rivian's technology in these newer models. And so, yes, Rivian is getting this $5 billion injection from VW, but boy, did they have to give up a lot to get that capital. And that's unfortunately the position Rivian finds itself in. It's going to be difficult for this company to continue raising capital from investors given the less than expected demand for electric vehicles, given the continuing price cuts, and given the situation they find themselves in. They're going to have to pay a pretty penny to get money from investors. And if they don't, they're going to find themselves in a desperate situation. So if you look at Rivian's revenue in the quarterly, if you look at the latest one, September 30th, 2024, they generated $874 million in revenue. That was way down from the same quarter last year where they generated $1.3 billion in revenue. So you have a company it's a startup, it's trying to grow, it's in growth mode, but it's going backwards, it's not growing. And that's the difficulty you have here. Their revenue has decreased in 4 consecutive quarters now, down from 1.337 billion to 1.3 to 1.2 to 1.1, now to 874 million. And I wouldn't be surprised if this decline continues until they launch that lower priced model, which hopefully will drive increased consumer demand. I'm not sure it will. I'm not sure people want electric vehicles at anywhere near the level that companies like Rivian were hoping they would, but they have no other choice but to continue. It's not like they can say, all right, let's quit, let's give up. They can't do that. They have to drive forward and hope they get to the point where they can produce those lower priced models and increase to a large enough scale where they're not losing so much money here. They lost another $1.17 billion in operations. That's 5 consecutive quarters now with over $1 billion in losses. At least the losses did decrease to 1.169 billion, down from 1.440 billion, but their loss did not decrease by as much as the revenue decreased. Revenue decreased by about 460 million. Their losses on the bottom line decreased by about 300 million. So they're still losing a lot of money on the bottom line, and reaching gross profit margin positive will help some of that, but it's still going to be losing hundreds of millions, if not billions of dollars every year for the foreseeable future. They now only have $5.4 billion in cash. And I say only because they've burned through roughly $15 to $20 billion already. So when you're going through $1 billion every quarter, $5 billion does not seem like that much anymore if you compare it to how much you're losing every quarter. That's down from 7.857 billion just 9 months ago. All right, so to answer the question of whether or not I think Rivian stock is a buy right now, I still do not like Rivian stock. I still do not like electric vehicle companies the data that I keep getting keeps getting worse with electric vehicle companies, especially if you exclude China. China is pretty much the only region where demand for electric vehicles is what was expected. That was what many electric vehicle companies were hoping for, but it looks like only in China is demand that strong. United States, still less than 1 out of 10 people are choosing EVs, and that's with thousands and thousands of dollars of incentives for people to buy an electric vehicle, and they're still not buying it. More than 9 out of 10 are choosing something else. So I still have this stock as a hold. It does have potential, it does have upside, but I don't think the upside is worth the risk in Rivian stock. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.